You remember how we celebrated the opening of the Strait of Hormuz on Friday? Trump has already triumphed the victory and Iran has allowed the passage for vessels. Oil went down, Bitcoin shot up to $78,000. And what is the result? Today it became known that Iran has blocked the strait again. The Speaker of Iranian Parliament said Trump's words about the preliminary agreements are not true. There was no deal, or it was there, but it's gone now. Bitcoin went to test 78,000 but returned to 75, and we need to understand what to expect next. But this is just the first piece of news. While the diplomats are sorting things out, hackers have created real hell in DeFi. The Kelp protocol lost $293 million. Investors have withdrawn more than $8.6 billion from Aave, and this is an escape, my friends. And against this background, Japanese institutions calmly declared that 65% of them already use Bitcoin. In general, we have a lot to discuss. Please like and subscribe so you don't miss the daily news, and we are getting started now. Let's first summarize the results of the last week, because without context, today's news cannot be understood. Over the past 7 days, Bitcoin has gained about 6%. It all started with a drop to $71,000 on Monday when the news of the failure of negotiations between the United States and Iran hit the market. But on Tuesday, Bitcoin rose above 74,000, and on Friday, after the statement of the Iranian foreign minister about the opening of the strait, the asset jumped to 78,000. But why didn't it stay that way for long? Because they overplayed everything, rearranged everything over the weekend. Iran has closed the strait again and Bitcoin has adjusted to 75,000. But something else is really important here. Within a week, spot Bitcoin ETF raised $996 million, and it's the second highest figure since the beginning of the year. Ethereum funds received $275 million. The total capitalization of crypto market has risen to $2.6 trillion, and the fear and greed index returned to the zone of reasonable fear at around 27 for the first time since mid-March. The market is on a knife's edge. One wrong move and we either just fly up to 85K or drop back to support. And now more about the geopolitical buffoonery. On Friday, we reported that Iran has opened the strait. The Minister of Foreign Affairs said that commercial shipping has been fully resumed for the duration of the ceasefire in Lebanon. Trump wrote the victory post and the markets exhaled. But the weekend passed and today is a new twist. Iran has blocked the strait again, and the Speaker of the Iranian Parliament said that Trump's words about preliminary agreements are a lie and there was no deal. However, not a word was said about the cancellation of the negotiations, and that is, there is still a possibility of a conflict settlement. But for now, the strait is closed, oil will rise again, and Bitcoin is under pressure again. That is modern politics to you, and in simple words, they are swings that constantly trying to dislodge traders' positions. Now, all the conditions for growth of Bitcoin price have objectively gathered in Iran, and the Strait of Hormuz, which control the price of oil, act as the main resistance. And of course, we are moving in the right direction, but until this conflict is over, we physically cannot break through the $80,000 level. At the same time, I remind you that institutions are very actively purchasing, and all analysts are already talking about institutional bull run. And my opinion is unchanged. This is probably one of the best times to accumulate a spot, but honestly, I'm still looking towards along with a slight leverage of about like 2 to 3x with a liquidation below $50,000. And by the way, if you want to buy and trade cryptocurrencies, I would like to remind you again about the sponsor of my channel, which I used for a long time before creating the channel itself. OKX Exchange is the best and most transparent solution for traders today. If you want to join and get welcome bonuses while supporting my channel as well, see the link in the description box down below. Now to the main criminal news of the day. On April 18th, hackers attacked the Kelp liquid restaking protocol, and the damage is approximately $293 million. How did it happen? The attackers called the is received function in the endpoint v2 contract, initiating the transfer of 116,500 restaked Ethereum to a personal address. Without going into technical details, they hacked a cross-chain bridge based on layer 0, and Kelp used a single verification scheme without reservation, one DVN, and one provider, a single point of failure. The Layer 0 developers who are conducting the investigation have already stated that they and other external parties have previously recommended that the project diversifies validators, but they didn't listen to them, and now we got a hole of $293 million. And who is behind the attack? According to Layer 0, the Trader group from North Korea. The same group that hacked Ronin for $625 million, Bybit for $1.5 billion, and Drift Protocol for $280 million. They gained access to a list of RPC servers, poisoned 2 of them, and launched a DDoS attack on clean servers. And as a result, the network relied on fake data, and the breach unblocked the tokens. Hackers deposited the stolen restaked Ethereum on Aave v3 as collateral and got wrapped Ethereum for them and borrowed about $196 million. Bottom line, Kelp has $293 million Aave has irrecoverable debts, and the Umbrella Reserve Fund actually first promised to recover the deficit, but then softened the wording to explore ways to compensate, and that is, most likely there will be no money. And that's exactly where the scariest part for DeFi begins. After the Kelp hack, investors fled Aave in panic, and in 2 days, the total amount of blocked value collapsed from $26.3 billion to $17.7 billion, and more than $8.6 billion have been withdrawn, and the price of the Aave token dropped by 15% to $91, capitalization from $1.8 billion to $1.3 billion. In Aave v3, the pools for USDT and USDC are completely exhausted, and assets worth $5.1 billion have been frozen, and they can be withdrawn only after the influx of new liquidity or repayment of loans. And the founder of Curve Finance summarized that Aave has restaked Ethereum which cannot be sold, and there is no Ethereum because it is all in loans, and nobody can withdraw Ethereum, and that is, my friends, is called a liquidity crisis, and it is happening right now, right here, and in the main DeFi credit protocol. And it's not just Aave, actually. The total TVL of the entire DeFi sector collapsed from $99.4 billion to $85.8 billion. The outflow also affected Solana, and Camino's deposit rate has decreased sharply in several USDC markets, and the reserve in one of the markets with the volume of $178 million has been completely exhausted. A chain reaction, one hack, and the entire ecosystem goes to hell. We have been discussing the fragility of DeFi for years, but today we see it just in real time, you know? And against the background of all these chaos, there is news that makes you just stop and think. Japanese financial holding company Nomura and Laser Digital surveyed 518 institutional investors, and the result is 65% of the respondents are already using cryptocurrencies to diversify their portfolios. And most of them plan to allocate from 2 to 5% of their capital for digital assets in the next 3 years, and 31% of the respondents positively assess the prospects of the market, and the share of skeptics decreased from 23 to 18%. There is noticeable interest in passive income, staking, mining, lending, and RWA, and Nomura analysis noted that investors stopped perceiving cryptocurrencies as just like experiment and moved on to practical issues of risk management. And in general, this once again confirms the information about the beginning of the institutional bull run. Well, that's it for today. Link to OKX is in the description box down below. Subscribe, click on that notification bell, and I will see you tomorrow. Bye.